we're going to be tracking on the bottom right hand of the screen how much money I'm going to be making. Guys, in this video, I'm going to be live trading and collecting over $20,000. I'm not sure exactly how much money I'm going to collect, but you can see on the day right now, I'm up $45,000. My portfolio is over $3 million. And I'm going to be looking to sell options, both puts and covered calls, to make over $20,000 in this video. It's a very rare video, which I don't typically do, but I have cleared up a lot of capital in my portfolio. This is typically only reserved for my Discord community where I actually do the live trading. But today I'm going to live trade. I'm going to have you watch me make over $20,000 so you can learn exactly how I'm doing it. And I have a list of stocks that I'm going to be trading. It's going to be American Airlines, Chipotle, Google, Apple, Nvidia, Amazon, Starbucks, SPY, and Tesla, all right, in no specific order. So let's get started right now. And I'm first just going to analyze what current positions that I have in my portfolio. So I have a mental note, okay? So I'm gonna go to total return, and you can see right here that I'm currently up money on American Airlines. I'm down on Google, so I'm going to get a sign there. I've covered calls on Google. McDonald's, this was a really good play. I have Palantir puts, Snap puts, Target puts, and a whole bunch of other stuff. So let's just start off with the first stock I have is going to be American Airlines. I'm also going to be showing you guys a technical analysis as well as why I am actually picking this stock, the specific entry. This is literally going to be the best video that you can possibly watch if you want to learn how to sell options for income and get to retirement. Right now, I have a lot of students that I'm focusing on scaling from 6 figures to 7 figures with my bootcamp. In my bootcamp, I'm working hands-on. I'm giving all my trades, and I'm also just going over my students' portfolio. So if you're interested in that, it is the first link in the description. You can learn more about my 6-week bootcamp, which is the best thing that you can do to reach retirement and get consistent income. American Airlines right now is touching $10 per share. It's just slightly under $10. So you can see here, if I go to the chart, American Airlines has had a big pullback. This has been a stock that I've been watching very closely. I like airlines because they're essential to the economy. People are going to be flying. This stock cannot go bankrupt because it's essential to the economy. So the government won't let airlines go bankrupt. So very good company overall because I like the brand. American Airlines as a brand is very good. But to be honest with you, I'm not opposed to JetBlue. I'm not opposed to other stocks. We might even cover that later on in this video. But let's start off with American Airlines. You can see that it's currently right under $10. It's actually showing really good signs of momentum. It has bottomed out at $9.28, and I have recently bought it for multiple different prices. I actually recommended a buy on this at $9.50. Now I have a lot of shares currently. I bought it previously. I've been trading the stock since 2021. So my current position, I am down 11 grand on this position right now, and I have 11.5 covered calls that are going to be expiring. So what I'm going to do right now is I'm actually going to close out this position. This expires tomorrow, and the current position has already made me $510. So I'm just going to take profit, and that way I can sell some new covered calls. All right, so I'm going to buy to close. Now I typically do buy to close if it makes sense. So there's various different scenarios, but if I can close out a position early on, I can get a really big profit, I will do that. Or if it's worth a penny, most of the time I'll do it, especially if it's like a day or 2 or 3 away. But the day of, like let's say the day of expiration Friday, I'm not gonna be closing it out because as you can see here, it's $30. And I mean, that's not much in comparison to what I'm trading, but $30 is still $30. But I wanna close out this position, take a profit so I can sell some new contracts here. Now, what I'm going to do right now, this is going to be a very interesting example. I'm actually glad that I started with the first one because right now as it's hovering around $10 per share, my average cost is $13.90. I'm actually going to be increasing my position and I'm going to be selling some put options and covered calls. Again, guys, this video is all about selling puts and covered calls. Literally the 2 best bread and butter strategies. I've been doing this for my entire life. That's how I've built basically 2 portfolios, which total around $6 million. Majority is through selling puts and covered calls. Now, in the early days, I did build more wealth doing spreads, but right now, if you are in the shoes of 6 figures or around 6 figures or even 50K, this is the #1 strategy to scale up and to get to 7 figures. Or if you have 7 figures, this is the way to basically make 50K a month or even more, all right? This is my best consistent income strategy and you'll kind of see why. So we're gonna actually keep tab, by the way, how much money I'm making. So as I said, we're going to be tracking how much money I'm going to make. So let's get started with the first trade. The first trade is going to be American Airlines. I'm going to sell a put option. I'm going to sell a put option to basically get exposure into the stock. Now, if you take a look at the chart right here, the bottom of the Bollinger Band is 909. I don't think American Airlines is even going to go down to the bottom of the Bollinger Band. To be honest with you, I'm going to be fairly aggressive. I'm going to go for a September expiration about 3 weeks out, and I'm going to go for a 9.5 put option that I'm going to sell. So I currently have roughly 3,000 shares. So what I'm going to do is I'm going to increase my position by about 33%. So I'm going to do 10 contracts here. I want to do 10 contracts to get exposure into basically 1,000 more shares. So I'm going to go ahead and execute this trade. This is a pretty small account friendly trade, by the way. So there you go. I got executed and I collected $160 right before fees. Let's just call it $160 so far earned by selling that put option. Now what I'm going to do is I'm also going to do a covered call on the current shares that I already own. So I own 3,000 shares, and by the way, I can just show you real quick. I can lower this average cost. This is like a real quick lesson for you. So I can actually lower the cost here. So if I go to buy American Airlines, I'm gonna just go ahead and buy shares. I'm gonna buy, let's just go for 300 shares. I'm just gonna show you what this looks like. I'm actually gonna execute for the purposes of this video on what dollar cost averaging actually looks like and how my average cost right now is gonna go from $13.90, and as you see, it went down to $13.54. So one of the best strategies, guys, if you wanna make money, I'm a bull in the market, guys. I've been making money for a decade now by being a bull. I'm not really trying to time the market. I'm just trying to acquire shares of stocks that I like, and then keep reducing the average cost, keep going with the covered calls. The covered call is the best strategy along with selling a put. They're actually very similar strategies. Selling puts just means that I'm basically selling a put option to someone else. Someone else thinks the stock will go down. I think the stock won't go down. So in this example, when I sell a 9.5 put option, I'm saying that I'm ready to buy at $9.50. I'm happy to buy, right? Or at least I'm betting that it won't go to $9.50. Now, if it goes below, I'm happy, guys. I'm never in the panic zone, because if it goes to $9.50, that means I'll be forced to buy shares at $9.50. Newsflash, American Airlines is $10 right now. So if I have to buy at $9.50, I'm pretty happy, to be honest with you, because I'm getting a better price than what the market is giving me based on technical analysis, the simple technical analysis. Obviously, we don't have time to go over every technical analysis indicator right now, but the Bollinger Band, it's at the bottom. I've been doing research on this stock for years, so I'd be happy to buy it at $9.50. So when you sell a put option, you want to ask yourself, would I be okay buying this stock? For me, yes. So I'm okay buying it at $9.50. I sold some put options. We made $160 so far. And now, although my average cost is $13.54, I still want to make some income, guys. So I'm going to go ahead and sell a covered call option. I'm going to sell a covered call option that's going to be below my current average price. And that's fine with me, because what will happen is I have a whole video training on this, and especially my 4-hour course, rolling an option is something that I do all the time. So let's say that American Airlines goes into the money, into this option, I can just roll it up. So for example, I can go ahead and do a 10.5 strike right here, which is above the current price. It may hit that, okay, but I don't even need to be a genius at technical analysis or anything like that, because I'm just gonna collect some income right now. And when it gets closer to September 6th, I'm gonna manage this position by basically rolling it higher if it hits my strike price. Now, if it hits my strike price before September 6th, then I will think about rolling it earlier. The good news is this option is about 3 weeks out. So as American Airlines kind of goes up in price, I'm just gonna kind of sit put and relax. I really don't need to do a whole lot until closer to the September 6th date. Or if the option goes into the money before September 6th, I'll think about rolling it up by $1. Now, in my Discord community, I have something called the dog strategy. In the dog strategy, essentially, I will roll up a option by $1 to $10. It just depends on the price of the stock itself. And then I'll roll it out into the future by 30, 60, or 90 days. So I would just do the same thing here by just rolling higher, guys. You can fix a lot of things by just rolling up an option a little bit higher. So let me go ahead and sell 33 contracts here. I could have sold 30, but because I just bought 300 shares for dollar cost averaging and for teaching you guys, I decided to, go 33 contracts. So that's going to be my entire amount of shares that I have. So I'm going to go ahead and submit this right here. That just got filled. So in addition to the $160, now we made $559. All right. So $559 added to how much I made so far. So these are the 2 trades I've had on American Airlines. Now we're going to go into the next trades that I have, which is going to be Chipotle on my list here. All right, so, and I'm not gonna go into any specific order, just Chipotle is a stock I really, really like, so I'm a bit antsy to trade it right now. I am currently down 6% on the stock. I have 1,000 shares. This stock makes up 1.8% of this portfolio right here. several portfolios I have, especially for students that I work with that want to scale up. I have margin trading and other strategies that I cover with them, but this is the most consistent income strategy that, you know, I think is going to be more beginner friendly for you guys, because one of my goals here on YouTube is to train beginners to get to intermediate. And basically I want to train everyone on how to make consistent cash flow. So let's go into the options right here. Chipotle is at 52. My average cost is 55. I currently have a 52 put that is open and I've sold it for September. So currently we have a September put option. So that's already giving me some more exposure, and quite a bit of exposure actually, because I have 50 contracts here. So this is a fairly big trade. I also have 60 covered calls on Chipotle, which are going to expire in September as well. So what I want to do right now is I want to get a little bit more exposure into Chipotle stock. So what I'm going to do is I'm going to sell a put option, okay? I want to get basically more exposure into the company. And again, I want to sell a put option because I would rather sell a put option than buy the shares. If I buy the shares, I have to buy it at 52.50. If I sell a put option, I can get myself a much lower price and I can actually get paid. I can get paid literally for the put option that I sell. I get paid right away. I get the cash up front. And then, hey, worst comes to worst, I'm gonna buy the stock, but I want to buy the stock. So it's a no-brainer for me. I'm gonna go with something really simple. I'm just gonna go for the 50 put option right here. You will see that the volume is very low, so that's fine. I mean, the bid-ask spread is pretty tight there. So I'm gonna be a majority of the volume today in the entire stock market for Chipotle for selling a put option for October 18 expiration. But, you know, that's fine with me. So I'm gonna go for 50 contracts. That's gonna be a lot of money. That's going to be a big position into Chipotle. It's going to give me a lot of exposure into Chipotle. But again, I'm bullish on Chipotle. Why? Because guys, when I worked on Wall Street, I had several different roles. I've had many different internships, okay? I never really wanted to work on Wall Street for a long time because the jobs were really tough, but I digress. Let me get to the point here. I was a technology analyst looking at SaaS. I was looking at brands, okay? So brands, technology, and restaurants, all right? So these are my three areas of expertise. These are the stocks that I like. That's why you'll see me having a lot of Tesla, Amazon, Apple, Google. I'm bullish on tech in general. Nvidia as well right now, all right? I'm bullish because I was a tech analyst. I love technology companies that have high growth and their options have a fantastic price. There's a lot of implied volatility. So I would say that that is a very good choice, all right? So for Chipotle, I like it because fast casual is growing. Chipotle has 3,000 stores, give or take, and I think that they can build up a lot more stores. Their same store sales of how many people are coming back to Chipotle to eat at the restaurant is growing. I think their supply chain is very good as well. So I was doing research into their supply chain. It's not that hard to source a lot of their ingredients, and they have a very simple menu. So I would say that they're not premium, but they're better than McDonald's in the sense that a more health conscious consumer, which is the trend right now, okay? A lot of people are going to Chipotle to eat there. They have different, whether it's keto, whether it's more on the vegan side, vegetarian side, you know, high protein side for gym goers or whatever. They have a lot of different options, and I'm really, really bullish on the business model. Now, I will say that they did lose their CEO recently. You know, it went over to Starbucks, but hey, you know, I'm still very bullish. So I'm going to sell at 1.7 right now. I'm going to collect $8,498 in premium. So you can see right now that I have submitted this, but the bid ask is 160, 170. So I'm going to have to replace this order right now, and I'm going to go down to 160. Well, actually 165. You can see that the bid ask is kind of going a little bit all over the place. Not really, but all right. So there we go. I made $8,348.50. So we're going to add that to my profits of Chipotle, and that will be my Chipotle position right now. I already have covered calls on it, so I can't really show you guys a covered call just yet, but I probably will soon. I want to do Tesla next. Tesla, I think, will be a really good one. So we're going to go to Tesla next, and all right, well, I just lost my pencil, so I was going to cross it off the list, but I can remember it. So funny. So let's go with Tesla. Tesla's up a lot today. I have a 215, 220 call credit spread, which is going against me. I have some more call credit spreads here. So what I want to do right now is I want to add exposure because I am bullish on Tesla. Yeah, I have quite a bit of call credit spreads at the moment. So I'm on the wrong side of things at the moment. I'm losing some money. But what I'm going to do right now is I'm actually going to do a fairly large size trade by selling some put options on Tesla. Let's go to Tesla on the technical chart. I'm just going to show you what I'm looking at. By the way, I have Walmart as well. Walmart had a really big beat. That's not on my list here because I'm currently doing covered calls and I have a lot of shares of Walmart. Makes up, I think, 11% of my portfolio had a 7% beat, and that's part of the reason why my portfolio is up $50,000 today is because of Walmart. So let's go to the chart on Tesla right now. And for Tesla, you can see that we're getting a really nice bounce off of a low here, the low of 191. We're getting a lot of upwards momentum. I would say that Tesla could be a $230 stock in the near future. But if it were to pull back and we see some negative momentum, I really see 194 is a very strong, it's the moving average, a very strong base. You can see that there was a huge bounce right here from 191. You can see if I zoom in, very big bounce. And specifically, I'm looking at the $200 level. I think we're gonna hold 200 very strong. So I'm gonna go ahead and sell a $200 put option right here. And this is gonna be about a 2% return in 20 days or so. So about 1% per week, give or take, maybe a little bit less, but I'm pretty happy with this overall. I'm gonna go for 10 contracts. That would be a sizable position for me here, but still is good with my risk management profile, all right? So if you wanna know your risk management profile, again, it does depend on the person. It depends how much money you're working with, but you wanna stick to some basic rules, which is don't have more than 10% of your money in a single position. You need to have diversity. You need to have 10 to 15 stocks. I say that all the time, so make sure that you actually focus on that because it is very important. All right, we're gonna go ahead and aim for 425 here. And this trade is gonna make me an estimated $4,249. So there we go. We're gonna add that amount right here, $42.49.70 to the bottom right here of how much I made in total on today's trading session. So that will be my Tesla position. It will tie up a good amount of collateral. So we've done Tesla. The next stock I'm going to go to is going to be Apple. This is a stock that I have a good amount of, and a really good amount of. This is my biggest position. I like Apple because of brand, okay? We all use a smartphone, and right now Apple is dominating. Now in China, they have some weakness where now they're less than 50% of the market share from what I've read. However, I think Apple has a very strong brand and they're going to continue making good cash flow. So I'm up $300,000 or roughly 21% on Apple stock. And right now I just have a sell put at 215. All right, I've cleared up a lot of my portfolio to make more trades today. I have a 215 sell put option, which is out of the money. I'm up $1,400 on it. I think that Apple will go up. If we look at the 3-month chart, I think that this is still going to be a bull run for Apple. Now, the peak here was around $235 per share. So I would say that doing some rough estimates and without having to do too much technical analysis in this video, using simple logic, the high for Apple was $235. This is a fairly safe point to sell a covered call. Now, keep in mind, when you sell a covered call, you are basically owning 100 shares. You're selling a call option to collect premium, and the worst that can happen is you lose your stock. So at worst, I would lose my stock. However, I'll be honest, I do not want to lose Apple for multiple reasons, one of them being tax reasons. So I want to be safe, and I'm going to sell a $235 call option. Now listen guys, if Apple goes to $235 and it hits that price, I'm going to immediately roll. Now, I don't always do that. Sometimes I roll immediately if I don't want to lose the stock. And other times I don't mind waiting a little bit closer to expiration. I'm not going to take any risks, although the risk is very small to get exercised. That typically doesn't happen. But as you get closer to expiration and as the stock is more in the money versus the strike price, your chances increase, okay? So that's just some food for thought right there, right? So I'm gonna go ahead and I'm going to trade the Apple options, and I'm going to just be very simple, and I'm gonna go out till the end of the month, or let's say September. I'm gonna go for September, and I'm going to sell a 235. Now the 235, to be honest, is still a lot of money. To be honest with you, it's $96. That's not low. So look, this is very interesting. I have 7,800 shares. I might decide to only do just 6,800. I'm gonna leave 1,000 shares uncovered just in case, all right? So I'm gonna go ahead with 68 contracts here. I'm gonna go for 0.97. Again, I'm going closer to the bid. You can play around a lot more, but I want to be very efficient in this video as I respect your time. So there we go. I've sold 68 contracts. I did not sell all the contracts on my position. That's because I want to leave some contracts open just in case we get a big bull run in Apple, that I'll have less to kind of roll. And also, guys, I am making enough money per month that I don't need to do all covered calls on all my shares, because I have another portfolio. That other portfolio, I'm doing a lot of income strategies as well. So I don't necessarily need to get greedy and just sell too many options. I will say that sometimes I just like to have some stock that has upside. It doesn't have to be all covered calls. And when it comes to selling puts, I am a little bit more aggressive. I actually love selling puts even on margin, but that's a separate topic. But for me, selling puts and covered calls is the only two strategies that you guys have to know to get to retirement. Those two strategies alone can make 10, 15, 20, much more than that. I'm gonna make over $20,000 in today's session, I believe. I don't know what our number is here on the bottom right that you're looking at, because I'm gonna do the math after I make this video. Since the video is unplanned, then I'm gonna make a lot more trades in this video. I'm still thinking about what trades to make. But anyways, regardless, sometimes I let some shares, I don't sell all the shares. So we made $6,593.96. So that's gonna be added to our amount, all right? So the next stock that I'm going to cover is going to be Google. This is a stock that I like a lot. I like Google a lot, specifically because of the YouTube platform. Obviously, I'm a YouTube content creator. I've helped many content creators in my life, so I'm actually have a lot of experience on the platform. I think YouTube is doing very well, and I think the business is a very solid business, all right? So I'm very bullish on search as well from Google, Google Ads, Google Search. There's just a whole lot in this company that I really, really enjoy. So I'm gonna keep that explanation pretty short. I have the 180 average cost right now. I have 400 shares, and I am going to get assigned some more shares here at 180, basically here tomorrow on the 8/16, all right? So I don't mind that. I'm pretty happy to get assigned, so that's not gonna be an issue. Now, I have Google covered calls at 165, which are currently out of the money. You guys do not have to worry about a stock that's out of the money. So when the covered call is out of the money, you just relax. Sometimes I know it's hard because a lot of my students, especially the wealthier folks that have, degrees, lawyers, doctors, etc., the folks that I really help scale from 100K, 200K portfolios to 400, 500, 600K, right? They want to do more because they're high achievers. But in option trading, it is sometimes just better to just relax, woosah, relax, and don't overtrade, because when you overtrade, it's not good. So as long as the stock is lower than the price of the strike of the call option, you're good. Just relax, okay? So actually, I could close out this option right now, but I'm not going to do that at the moment. I'm actually gonna show you a lot of different trades. Let me just check how much money I do have in my investing portfolio. I have $186,000, okay. Because what I wanna do is I wanna buy some shares of Google, as I do really, really like the company. So I'm gonna contemplate investing more in it. So first of all, I'm gonna get assigned on the 180 put. So I will have 100 more shares. This is the same math you guys should do. Now I know I have 500 shares, 165 covered call, I have 4 contracts. That's also gonna expire tomorrow. And actually this is gonna be good. This is actually very easy money because $16 will happen in one day. Now, I also did a poor man's covered call for my Discord community. We just did that yesterday. So you can see that I just opened this up 24 hours ago. It literally says 24 hours. I've invested $2,775. and we're up $47. So not too bad for one day's earnings. By the way, you guys can still open up this trade right now. This is gonna be a trade that's gonna be open for a very long time. So this trade, the call option, all right, is going out until December of 2025. So, in my teachings, I have small portfolio trades, medium and large portfolio trades. And I decided to do a poor man's covered call for my Monday and Wednesday sessions. I have Monday and Wednesday sessions. They're 45 minutes and my students talk to me and we do trading live. That's what my bootcamp is and my Discord. Again, you can learn more about that in the first link in the description. Not to sound salesy, I'm just trying to explain to you why I did this trade. So I did this trade because I am bullish on Google. To be honest though, I made it very small position because this was just an example. That's why I have only one contract. So it's a small account position that I opened up and it's going out to December 2025. And then I sold a short-term call option at 170 call for October. So this is honestly a perfect trade that I would literally do if I were you guys. Not financial advice, not a financial advisor, but I'm making money, all right? I'm making a lot of money. I've retired doing this, and I'm just teaching it partly for fun and partly because I enjoy it. And yeah, I get paid as a coach as well in my community. It's not free, but I just love what I do. So this stuff works. Like literally it works. I could do other things in life, but I'm doing it because this stuff works. Like this is where 110% of my net worth is, guys. 110 or 20%. I don't have any cash, guys. My bank account is zero. I use credit cards, and then as I collect income from, I get paid a little bit from YouTube. As I collect income, I'm withdrawing money from the portfolio and I'm paying down my credit cards. My bank accounts are zero because I don't believe in having any cash. I want to invest it and create income from it. We have inflation, we have high inflation. So I would like to get richer by trading, all right? So I don't have any cash. I invest everything I have in both my portfolios. This one over 3 million now, and the other one over 3 million. So both portfolios have scaled very nicely, and I don't like having any cash. So hopefully I'm not rambling on. Let me get to the point here to keep trading, keep making money. This is a good poor man's covered call to have, all right? Long story short, that's a good poor man's covered call. This will expire in December, and this will expire in October. When this expires in October, if Google is under 170, perfect. If it's over 170, I'll probably roll up the covered call, or I can close out the position as a whole. Guys, I can close out this position right now for a $43 gain on $2,700. That's like a 2% return in 1 day. That's 2% in a day. Doesn't seem like a lot. Now it's up $63. Just call it 50 bucks. All right. I made 2% in 1 day. All right. Not a lot. Doesn't seem like a lot, but it's a lot. It is a lot. Believe me, it is a lot. It adds up. That's how you scale to a 7-figure portfolio. You just have wins, add more money, and just things scale. It's just snowball effect. That's just how money works. I'm going to sell some more put options right now. I am bullish on Google. So I'm going to go to sell put, and I am going to sell a put for January. I'm just going to go a little bit longer term. Yes, I get it. I'm kind of counting my chickens before the eggs, but this is going to be successful. I can practically guarantee, I'm not going to use that word, but you get what I'm saying, right? I can pretty much bet real money on it that this is going to be successful. Just trying to think how to say it. This is as sure as it gets. Pretty much as sure as it gets. When you go out of the money, you sell a put option at like 150, easy money. All right, so if I go, I'm running out of money right now though. So $72,000, that's good. Not good. I get what you're thinking. You're like, oh my goodness, $72,000 max loss. No, that max loss, that $72,000 is if Google goes down to zero, which is not gonna happen. It's not gonna happen, all right? So take it easy, it's not gonna happen. It's not gonna go down to zero. And that's why the max loss looks so scary. In fact, the max loss is that if it goes to zero, but it's not gonna happen. So I would collect $2,700. What I meant by good was I'm tying up 72 grand worth of collateral, which is fine with me. 2,700 is going to be a decent return for me, especially because this is just not gonna happen. So I'd be very, very happy to buy it at this price. So 545, and let's submit this. And we got filled, so we can add $2,724.85 to my overall profit, which I believe is now over 20 grand in collected premium. So that will be my Google Play, and I may close this position in the next month or two. If I see a good profit, then I will close out the position in a month or two. So we did Google, we did Apple. Let's do Nvidia right now. Nvidia, I might do a poor man's covered call, or the title of this video is selling options. So I mean, I can do a poor man's covered call, but again, I prefer selling puts covered calls, and that's the most consistent retirement strategy that I got. And that's the type of person I like to work with. Someone that's has a career or has money saved up, multiple 5 figures, and then just helping them scale to 6, or the 6-figure folks scale them up to 7, and 7-figure folks is just smoking cigars on the beach for the rest of their life, which is what I could do, but I choose not to. I don't want to. It's kind of boring. I've kind of done that. So Nvidia is recovering quite a bit, which is really nice. So I just want to make sure that I want to pay attention to taxes a bit. So the last time I traded this was in August 12th. I had a put credit spread. So that put credit spread is currently open. Yep. So it's open and I am up. All right. So I just made this trade. I kind of forgot about it. On 12th, which is 3 days ago, guys, I collected $945. And right now I am up $870, and it's going to expire next week. So I could definitely close this out for a profit, but I just want to stick to selling puts and covered calls. But I'm going to close this out for a profit, and It's made a lot of money. I did pretty bad by selling Nvidia back in July 24th. So I think I had a gain on it though. I had a gain. So I can trade it because it won't affect my wash sale rule. The wash sale rule, by the way, is if you lost money in a stock, it helps you. It helps your taxes because you can write off the loss. But if you buy back the stock within 30 days or basically 30 days, the IRS rules, I believe. Check out the government IRS website. If you buy it back within 30 days, it doesn't count. It's called a wash because you're buying back the same position, so they're not going to count it. They're not going to help you out. So because I did trade it July 24th, I still cannot really trade it, although I do believe that I have a gain. Let me go to my history actually. I sold it for $113.97, but yeah. So it's going to be hard to figure out what price I got it for because $113.97, I sold it, but I don't have a buy on this. It looks like I bought it in July 19 for $118, and I collected $3.10. So my average cost was like $115, and I sold it for $113.97. But I also had some covered calls, so I don't want to be in a sticky position of the tax side. So I am not going to trade Nvidia until 10 more days. But in 10 days, I will just sell some put options. So I will sell some put options. Yeah. I'm gonna just sell a 110 put option, which you can do right now if you want to follow my opinions. All right, so you can do the 110 put option. I would do the 110 put option for October 18 expiration, which is the third traditional Friday expiration of October. I would do that on Nvidia. I think it's easy money going for 110. I would do it myself, but I don't want to incur any wash sale rules, so I won't do that. Next one is going to be Amazon. So I like Amazon a lot. Amazon has had some upwards, downwards action. I currently have Amazon at $160 per share, and I don't have any covered calls or any sell puts. I'm up $16,000, 10% on the position. And I think that I would love to just have more Amazon. So I'm going to go to trade Amazon options, and I'm going to go sell put. And you can go aggressive, you can go short term, you can go long term. It really doesn't matter. As long as you're collecting income, selling options, you will make money. After working for Goldman Sachs, I've read the research. This is stuff that I've done, guys, almost a decade ago. Well, it was in 2016 that I was working for Goldman Sachs. So I've been at this for almost a decade, more than any creator on the platform. I've been trading for the majority of creators, at least. I've been trading for almost a decade, and I've read research that obviously I can't really show because I was working internally to the company. I cannot take those research reports and show them. But I'm telling you, I've been basically executing the strategy that I learned at Goldman Sachs, that I taught myself. No one really taught me the strategy. What I did was, telling you the truth, I was sitting in an office basically with financial advisors managing billions of dollars. But what I did in a lot of my time was I did my own research because I was interested in options. I wasn't an option trader at Goldman Sachs. I was a financial analyst. So I was looking at stock portfolios, wealthy individuals, but in my private time during work hours, I was researching options to the maximum. I was researching all the options that I could, selling puts, covered calls, why things are working a certain way, studies. So I'm bringing you this wealth of knowledge, guys, on this channel. I'm sharing with you my experience because I've already made it. I've already made it financially. Now it's your turn. Now it's your turn. That's the whole point of this channel. That's the whole point of my bootcamp. That's the whole point of my Discord, is to help other people that want to get to my position now, which is $6 million, age 30, basically, financially free. Still making more money, but I don't need it. I just like it. I like it. It's a sport. I want to teach more people. I want to help more people. I want to have more students. I want our community here on YouTube to grow. So please subscribe and please share this video with someone else if you're enjoying this video thus far and you find value in it, okay? September 20th, Amazon. I got into that whole spiel because selling options works. The expiration, the whole point was to show you that expiration doesn't matter. I can choose September, I can choose October. Either way, I'm gonna collect money in selling a put option on a stock that I wanna own. So I'm just gonna use September 20. I do prefer monthly options. They're the most simple, all right? But again, when I work with people hands-on, one-on-one, or in my boot camp, or I basically figure out what a person wants. So they need weekly income, do they need monthly income, or some folks that are retired just want a quarterly check. That's fine too. I like monthly income. To me, it's the easiest because I typically track my expenses on a monthly basis, all right? Let me go ahead and sell the 165, just easy money right now, easy money. I've already done the research, by the way, before making this video, obviously on these stocks. Been following them for a very long time, and I follow the same basket of stocks. So I basically know the value of Amazon. And again, I do all this technical analysis live usually, but this video would be too long. So cash secured puts, I'm gonna do 10 contracts. So that would be a pretty big sizable collateral. This is collateral. It says max loss. It's not the max loss as I already explained. Amazon's not going to zero. It's not even going to $100. It's not gonna happen. So I'm gonna go to 1.66. I'm gonna pick that as my bid. Closer to the bid is what I wanted to say. So there we go. I sold 10 more put options, and that has made me $1,659.70. So let's add that down below. Now, last thing that I wanna do is I'm just gonna show you a simple SPY put option. This is literally just for you guys. I personally would go a little bit riskier and I would do more Amazon or Apple or Google or Chipotle or American Airlines, but I will show you SPY because I have so many students that are retirees who are close to retirement. They don't want any risk. They don't want no problems. They don't want no complexity. They just want to stick to SPY and QQQ, which is a strategy that I teach a lot of my bootcamp members. I teach them the strategy because there's no stress around it. You just sell put options. So we're gonna go ahead and we are going to sell the put option here. All right, so I'm gonna go ahead, trade SPY options, and I'm gonna go to sell put. Don't do 0 DTE, it's just not a fan of it. You can go really short term. So let me just show you what a short term sell put would look like if you want more consistent cash flow. I'll show you two different options. I think I have enough money to do both, so let's just do both. For example purposes, I'm gonna execute both of these. So we can do an option that expires tomorrow. I can go out of the money and just make a pretty simple income right now by doing this. Just one contract, 0.36. And this is kind of like a 0 DTE, short-term, one-day trade, just showing you the ranges of what's going on and what you can do. So I just sold that, made $36, put that down below, add it to my total. But now I can also go longer term. And I don't really want to open up this position. I guess I will because I'm trying to increase the number of how much money I make today. For the purpose of this video, I guess I'll execute the trade. But to be honest, I don't really want to tie up the collateral, but just to show you what it looks like. I would sell a put, no technical analysis on SPY. You don't need it. It's so simple. It's just a macro economy. SPY is a basket of 500 stocks. Therefore, you don't need to do any technical analysis. You can't predict the market. So it's very, very simple. You just go out of the money to where you're comfortable. I look at Delta. Delta's 18 here, so that's pretty good, to be honest. The Delta's 18, so yeah, you can just open this up, click continue, and one contract, 285, and there you go. I don't think I'm gonna execute the trade. I don't really need a $285 to tie up this amount of capital because I am currently trying to scale my portfolio to $4 million. We crossed $3 million in the portfolio. So I'm trying to aggressively grow to 4 million. So to be honest, SPY is a great strategy, but I'm not gonna be able to get to $4 million fast by executing SPY. So what I'm going to do is I'm probably going to do poor man's covered call or something else. Haven't decided, but I need to do a Discord session right now. So this will be the end of the video. I hope that you guys really enjoyed this video. I tried to be as honest as possible about all the trades I'm making, why I'm making them, showing you some of the technical analysis. Maybe I could have done a bit better job in showing you more charts. But if there's anything that you guys want me to make more of, comment down below. Hope that you guys appreciated this video. Hopefully you shared it with a friend. Hope that you also subscribe and you found value in it. And as always, quick spiel, I have a bootcamp that's 6 weeks and I have a Discord community and I do live coaching calls. The bootcamp includes all of that. So the bootcamp is the best thing that you could potentially learn more about by visiting the first link in the description because that's where I work hands-on and it includes the Discord as well. So I'll just leave it there, guys. I've been talking too much and I hope that you enjoy the rest of your day and make some money. Make some money. This stuff really works. I just want to say that so blessed to have option trading. Just contributes so much to my wealth and give me the flexibility to travel. And that's why you guys see me in hotels and living all over the world is because I want to enjoy the world, travel, see more cultures, try more foods, meet more people, network, have a good time. And option trading has been really good for that. It's allowed me to be very free for the past 4.5 or 5 years of trading. So really scaled up and hope that you guys do the same. I really think it's possible for anyone. I hope I can be that coach for you. I hope that you guys will take action and No matter where you are right now, you can do it. You can scale from a 5-figure portfolio to 6, from 6 to 7, and I'm working on scaling from 7 to 8, which feels really weird because I like being humble. I didn't grow up with money, and yeah, it feels weird to have this amount of money. It feels weird. Powerful and weird, but in a good way. So hopefully that you guys get to this point as well, and I'm going to be here for you to help you do it.